In this video, we're going to talk about invoices and sales receipts within QuickBooks Online. Understanding these two different forms and their purpose, as well as how to create them, will really help improve the quality of your bookkeeping records. So first, we want to talk about an invoice. An invoice is used when a customer buys something from you, but it's going to pay later. So the key characteristics of this is it records a sale. It creates an accounts receivable, meaning that somebody owes you money. It hasn't been paid yet. And it can have payment terms. It can be due on receipt, due in 30 days, due in 15 days. However you set it up, it has specific terms. On the other hand, a sales receipt is to record a transaction that has taken place, but is being paid immediately. There's no terms because ultimately it's kind of like when you go to the store and you make a purchase and they give you a receipt. That's what the sales receipt is. Within QuickBooks Online, it records that transaction immediately and then sends a receipt to that customer. If you have their email address, input it in their details. So that's the difference between the two. How do you create an invoice? First, you're going to go over here to New, and under Customer, you can see that there's Invoice and Sales Receipt. So an invoice, select your customer. Depending on the information you've created, it'll input some of this information. Here's some billable time you've entered within QuickBooks Online if you manage time. If you do not manage time, then you don't need to worry about that. You can select a product or service that you've set up previously. We're not going to cover how to set up these products and services in this video. We'll cover that in a later video. But assuming you have products, and QuickBooks already has some defaulted, like services. So services. I'm going to set this up. Description, did work. Quantity, 1, rate. Let's say you're billing by the hour. You did 5 hours. You're billing at $75 an hour, $375. The terms on this are currently net 30, which means due in 30 days. I'm going to do due on receipt, $375, and then save and send. This is going to pull up the email that's going to get sent to the client with the link to the invoice. Send and close. The invoice has been sent. So now what this will do is it will record that within your accounts receivable, but it's assuming you're on the cash basis, which most businesses are. It's not going to show up on your reports because you haven't received any cash for it yet. It's just going to show up on accounts receivable. So when you receive that check, you don't want to just enter it as a deposit. You actually want to go through a very specific process to apply that payment to that invoice. Again, we're not going to cover that here. This video is specifically about how to create the invoice, how to create the sales receipt, and what the difference between the two are. A sales receipt is pretty much the exact same process. It looks very similar to the invoice. The only difference you'll notice is there's no specific mention of any terms. So again, we'll just do Amy's bird. There's no terms of services. And the other addition is it gives us this line here that says how we were paid. So let's say we were paid by check. We're going to take the check, enter the check number or reference number. And then as a good rule of thumb and a good practice, deposit it to undeposited funds. Why do we deposit it to undeposited funds? We're not going to cover that on this video, but we'll get into that later. Enter the service you completed. Again, we're going to say did work. Worked 3 hours, $75 an hour. Maybe I did 5 hours. $375. So once I hit save and close or save and send, what this is actually going to do, it's going to go through the same process. Looks almost identical to an email. Sends an email. Instead of saying, here's your invoice, please pay though, it's just going to say, here's your sales receipt. Send and close. So once this has been done and this process has been completed with the sales receipt, the difference is that payment, nothing's going to post onto your accounts receivable. That income is going to post directly to your profit and loss statement as revenue, as taxable revenue. And then it's going to post to the undeposited fund because there's a certain process that you need to go through to ensure that your deposits are made correctly, to make sure the bank feeds and everything else within this QuickBooks account is accurate. I hope this video was helpful. Click like if you liked this video. Continue to follow as we add content to this page. And until next time.